Hi, it's Larry Gaines from Options on the Open. Well, I hope you had a great week of trading. It was one wild and furious, volatile week. But we had some fantastic trade setups at Options on the Open. And before I get started, though, I wanted to make sure that you have received my free ebook. And to do that, just please go to my website, optionsontheopen.com, and on my homepage, you will see get your free ebook and educational videos. So it's 15 really great option strategies, and so just put your name and email address and it'll get to you right away. So let's get started. Now, with breakout trading, one thing that we use at Options on the Open are trend lines, and there's a correct way to use trend lines and there's a incorrect way to use trend lines. So it's pretty easy to once you find out the correct way, and when you do it the way I'm going to teach you, and you do it every time, it becomes mechanical, and it's something that you can use as a systematic approach. So it's just one extra tool that we will use at Options on the Open along with our power cycle trading model to really get us into some great trades and breakouts. So just this is the first thing to look at. Now, supply and demand dictate price movement and the use of trend lines. Now, trend lines are universally used, but the construction of them can be very dissimilar from one person to the next, causing a very subjective interpretation of a trend line. And this is what can mess you up. So consistency and uniformity are totally lacking from most people drawing trend lines. Now, there's one effective method that will make constructing a trend line consistent and mechanical and making it no longer subjective, and that's what I'm going to show you today in this short video. Now, again, the difficulty when creating these lines involves specific points from which to select and connect your trend line. Human nature often interferes in the proper construction of these lines, so we are accustomed to review the historical price activity of a market from past price to present, with the dates reading from the left of your chart to your right. And as a result of this, the demand and supply lines of a trend line are drawn and extended from left side of your chart to the right. Now, intuitively, this is incorrect because recent price activity is more significant than historical movement. So precision and accuracy demand that lines be extended from right to left on your chart rather than left to right, and with the most recent date appearing at the right side of the chart to start your trend line. So that's the first thing to get in your mind. Now, to do this, I will use what is called supply pivot points. So a supply trend line is the declining price movement as defined by down sloping supply line, as well as the pattern of both lower price highs and lower lows. So the supply pivot point is when there is a price high that is not exceeded by the prior price or price immediately after, and this is called what we call a pivot high. Now, this chart will show you a lot of different examples of this. This is just on the S&P 500. This is a 60-minute chart. So here, see this pivot point, this red dot here. See, here is the bottom, and I'm just going to go from most recent price to this bottom price. So you go from right to left, not left to right. So here's the most current price. So this is your pivot point 1. See that price point, that bar right there is higher than the bar before it and the bar after. So the top of that is your pivot high, and then you go to your next pivot high, which is way up here, and you can see that that pivot high is higher and that bar is higher than the prior bar and the one after it. So then you put your trend line there, extend it up there, and then extend it down there, and then you can see from this descending supply trend line, you can see a defined break on price and a movement and a breakout. So pivot point 1 from right of your chart to pivot point 2 to your left, and that's it. So here's another example. Here's a pivot point high, point 1, and then go to your left to more historic price, so recent price to past price. So point 1, point 2. And that's all there is to it. Now the demand pivot point is just the opposite. So demand pivot point is when there is a lower price that is lower than the prior price and the price immediately after. This is a pivot low. So here's just a quick example. This is again the S&P 500. This is a daily chart, and this chart's showing an ascending demand trend line. And so what we do is we go to the most recent price, pivot low. So this low bar is lower than the one prior and lower than the one after. And then this one down at the bottom is your second point, so from right to left, and this is a lower bar than the prior and a lower bar than the one right after it. So recent price, past price, so right to left. And then you have your points there to connect to there and extend the line. And you can see when that line's broken, you have a nice momentum to the downside. So here's one more example, and that's all there is to it. Now you can use this way of drawing a trend line for whatever time frame that you want to use. And here's Apple on a 5-minute chart, and this was taken on June the 29th, Friday. And using my cycle model, this is where it alerted us that there's potential for a trend shift to the upside. And then the cycle model actually went long on the power cycle model right here, and it also coincided with the break of a trend line. So we'll use a trend line as an additional tool in order to really define some really great breakout trades using our power cycle trading model. So again, here's your pivot high, your most recent, from right to left. So here's a pivot high, so that this bar is higher than the previous and the bar after. And then you go to past price, the next past price, where you have a higher bar, higher than this bar, and that's defined by a pivot high that is a bar higher than the prior and past and one after. So then you draw your trend line from here to there and extend it, and then you see if you have a breakout. So on this particular example, we had a fantastic trade set up using the power cycle trading model, and then also defined and validated by a trend line break. So that's it. So if you'd like to learn more about how we trade using trend lines and the power cycle trading model for some very, very great trade setups using futures and options, please come join me at optionsontheopen.com, and good luck trading this next week. One last thing I wanted to mention. This going into 4th of July weekend will be the first anniversary of when I released the power cycle trading model. So it's been out now for a full year, and we've done a few additional adjustments to it, but it's a fantastic trading model. So please stay tuned and come join us and learn how we use this powerful, highly accurate trading model to help us trade, day trade and swing trade, and use it for longer investment portfolio decisions.